Welcome to the deep dive. Today, we're really zeroing in on all the noise around U.S.-China trade and, well, the whole situation with Federal Reserve Chair Jerome Powell.
Yeah, it's been quite a whirlwind.
It really has. And you've shared a stack of reports with us, so our goal here is to, pull out the key insights. What are the actual takeaways?
What's really driving things?
Exactly. And maybe what we might expect next without getting totally bogged down in every single headline.
Makes sense. And looking at these sources, there are sort of two main currents, wouldn't you say?
I think so. Go on.
Well, first, there's this potential shift, maybe, in how the administration's talking about the China trade relationship, hints of de-escalation, perhaps.
Right, but we need to balance that against China's perspective, too.
Definitely. And the second thread is President Trump's stance on Jerome Powell. It seems to be evolving, or at least the narrative is.
For sure. And beyond those big two, the reports also mentioned the wider economic picture, like the IMF revising the U.S. growth forecast down.
And some other trade proposals bubbling up, too, from different countries.
Okay, so let's unpack the China trade stuff first. Where do we start?
Well, what's interesting right off the bat is the sort of mixed messages. You've got Treasury Secretary Scott Best apparently saying privately the trade war isn't, quote, sustainable.
Not sustainable.
And that he expects some kind of near-term de-escalation, though he does still think negotiations will be tough.
Right. And then you have the White House Press Secretary Caroline Leavitt sounding optimistic, too, saying they're setting the stage for a deal.
Yeah, echoing that optimism. But it's important, neither of them seem to suggest actual formal talks have, kicked off again.
Okay. So it's optimism about the possibility of a deal, not necessarily that they're back at the table hammering one out right now.
Precisely. It's that gap between the talk and the action, And then if you look at President Trump's own public comments, well, it gets even more complex.
Yeah. How so?
He talks about playing hardball with China with President Xi.
Okay. The tough talk.
But then, almost in the same breath, he says he'll be very nice and insists China has to make a deal. It's kind of a whiplash.
Hardball and very nice. And didn't he mention a specific tariff number, something about 145%?
He did. That tariffs need to come down from 145%, which is a figure that doesn't really match the known tariff levels.
So maybe a negotiating tactic? Or just unclear where it comes from?
Hard to say. But he also repeated the line about China destroying the U.S., taking it for a ride. So it's still that tough rhetoric mixed with this expectation of a deal.
It definitely creates a sense of uncertainty.
Right.
What about these other trade proposals the White House mentioned?
Right. They claim they've got 18 trade proposals on paper, and they highlighted how busy their trade team is naming Besant, Lutnick, Greer, Hassett, Peter Navarro.
That whole team.
Yeah, saying they're meeting with lots of countries. The claim is over 100 countries want deals.
Wow. 100 countries. That's interesting. It suggests a lot of activity anyway.
It does. And the sources also flag that the U.S. might be getting close to general agreements with Japan and India.
General agreements.
Yeah, but the reporting suggests these might, initially at least, be more like memorandums of understanding, MOUs, kind of frameworks for future deals.
Got it. So steps in the right direction, potentially, but maybe not fully fledged, signed, sealed, delivered deals just yet.
Exactly. Potential progress, maybe slow progress. But what really seems to connect all this talk to potential reality is this reported scare.
The scare? What scare?
The one President Trump supposedly got from CEOs, big retailers like Walmart, Target, Home Depot, and the market drop on Monday.
Right. What do they supposedly say?
Well, according to the reports, they gave him some pretty blunt warnings. Things like price hikes are coming soon, shelves could be empty in 2 weeks.
Empty shelves. Wow.
Yeah, and that smaller companies, the ones really relying on trade, could start going under.
That sounds like serious pressure. Direct economic pain hitting home.
You'd think so.
Yeah.
It suggests the consequences are becoming, undeniable, even forcing a rethink, perhaps.
Which leads to the internal White House dynamics, right?
Yeah.
The idea that some officials might be trying to persuade him the tariff approach was maybe too dangerous.
Exactly. That it had broader, maybe unforeseen consequences.
And the reports touch on how difficult it might be to give him that kind of blunt feedback.
Yeah, there's the suggestion that influencing his thinking often means either bringing in people he really respects or, framing things as his genius idea.
Interesting insight into the policymaking process there.
It really is. It tells you a lot about how decisions might get shaped. Now, shifting gears a bit, what about China's reaction to all this?
Good question. What are they saying?
Well, their translated statement is pretty direct. They basically said the U.S. can't expect an agreement while also using extreme pressure.
That makes sense. Hard to negotiate under duress.
It highlights that fundamental tension in the U.S. strategy, doesn't it? But on the other hand, some Chinese trade officials are reportedly trying to put a positive spin on it. Just saying that, hey, as long as there's dialogue, as long as people are talking, that's a good sign. So maybe seeing the ongoing contact itself as hopeful.
So a real mix of signals on the trade front. Internal pressures, external reactions, optimistic talk versus tough talk.
Exactly. And we see a similar kind of back and forth playing out with the Federal Reserve and Jerome Powell. Remember that online post from President Trump?
Oh, yeah. Powell's termination cannot come soon enough. Pretty unambiguous.
Couldn't be much clearer. But then, almost immediately,
He walked back, claimed he never was actually going to fire Powell, so the media blew it out of proportion.
total reversal. From termination talk to never intended to fire him.
Yeah.
What do you make of that kind of sharp turn?
Well, it creates massive uncertainty, doesn't it? And the market certainly didn't like the initial threat.
Not at all. They tanked pretty quickly after that post, which just underscores how much markets rely on the idea of Fed independence. You know, they need that predictability.
Absolutely. Political interference is like kryptonite for market confidence in monetary policy.
And the fact that markets then bounced back when he seemed to soften his stance just reinforces that point. Stability is key.
So he backed off the firing threat. But did he back off wanting lower rates?
Not entirely, no. He did repeat that he wants Powell to be a little more active on lowering interest rates, said this is a perfect time.
Still applying pressure then?
Seems like it. He kind of downplayed the consequences if rates don't get lowered, but he stuck to the idea that it would be good timing. So the immediate job threat might be gone, but that underlying desire for rate cuts is still there.
It's a tricky line to walk, isn't it? Expressing preferences without looking like you're directly ordering the Fed around.
Very delicate. Okay, so stepping back now, how does this all fit into the bigger economic picture the sources paint?
Well, connecting these dots, the IMF slashing its 2025 U.S. growth forecast seems pretty significant, down to 1.8%. That's almost a full point lower.
Yeah, that's a chunky revision downwards. Suggests a less rosy outlook ahead.
And it wasn't just the number. There was that comment from an IMF official about the international financial community's concerns regarding the White House. Two main ones.
Right. First was the obvious one, disagreement with the protectionist policies, the tariffs. We've talked about that.
But the second one was maybe even stronger.
According to this official, yes. The bigger worry was about, quote, competence in managing not just the U.S. economy, but the global economy, too.
Wow. Competence. That's a strong word coming from the international community. Speaks volumes about perceived stewardship.
It really does. It suggests a lack of confidence that goes beyond just policy disagreements.
And you saw the market reaction yesterday. Futures up sharply. NASDAQ, S&P seemed directly linked to this renewed hope about trade and Powell keeping his job.
Absolutely. It shows just how reactive markets are to these signals. That desire for stability and predictability again.
Definitely. Now, you mentioned some other quick market movers.
Yeah, just briefly. Tesla shares got a boost, apparently because Elon Musk is reportedly spending less time on DOGE and more on Tesla. Make of that what you will.
Okay.
Then there were the EU fines for Apple and Meta under their Digital Markets Act, which kind of makes you think back to President Trump's previous comments about maybe hitting countries with tariffs if they penalize U.S. companies.
Right. Connects back to the trade theme again.
And finally, one U.S. trade official mentioned some trade bloc looking towards Asia, trying to de-risk from China. So signs of the global trade map shifting, too.
Okay, so as we try to wrap this deep dive up, the main takeaway seems to be, well, navigating a whole lot of contradictory signals and uncertainty.
I think that's fair. You've got optimistic noises on trade from some officials.
But then really unpredictable rhetoric from the president himself and a very cautious China.
Right. And on the Fed side, the immediate threat to Powell seems lower, but the pressure for rate cuts, still there.
And hovering over all of it are those broader IMF concerns about the policies themselves, yes, but also about that perceived lack of competent management. That international perspective is important.
Definitely gives it context. And the market jumps just show how sensitive everything is, but also how unstable things feel, given how quickly stances can shift.
So considering all these rapid changes and these, frankly, conflicting messages we've discussed, it leaves you wondering, doesn't it? What are the real signs to watch? How do you figure out the actual direction of U.S. trade policy or gauge the Fed's true independence going forward?
That's the million-dollar question, isn't it?
It really makes you think about the longer-term impact of all this uncertainty, not just for the U.S., but for global economic stability, for business confidence everywhere. Something definitely to keep mulling over.